Hi, I'm Brandon Stevens, Sales Development Manager here at Brooks Equipment. And today I want to tell you about the new CARES Act tax deductions for installation of fire and life safety equipment. The Coronavirus Aid, Relief, and Economic Security, or CARES Act, became law on March 27, 2020. This $2 trillion economic relief package provides relief to businesses that have experienced economic impacts due to the COVID-19 pandemic. One of the better known programs of the CARES Act is the Paycheck Protection Program, or PPP. This provided small businesses with the resources that were needed to maintain their payroll, hire back employees that were laid off, and cover applicable overhead such as rent and utilities. A lesser known provision of the CARES Act was a change to Section 168 of the Internal Revenue Code, which allows your customers to deduct qualified improvement property, or QIP, in the first year. This 100% bonus depreciation in your customer's federal tax return is what we're going to discuss today. This is something that you should consider explaining to your customers because the installation or replacement of fire protection and life safety equipment that is installed internal to the building is a QIP. This is a win-win situation for you and any customer that decides to install or replace fire and life safety equipment inside of their building. They will reap a huge tax deduction benefit, and you'll increase your revenues for sales and installation of the new fire protection and life safety systems and equipment that's installed. Here is what you need to know to help convince your customer that now is the time to make these improvements and replace and install new safety equipment in their building. Depreciation is a reduction in the value of an asset with the passage of time, due in particular to wear and tear. A business is allowed to take a tax deduction or write-off for the cost of certain assets, including property and the contents within a building. Depreciation is governed by Internal Revenue Code, Section 167A. Specifically, this section allows depreciation deductions for the exhaustion and wear and tear of property used by a business or held in the production of income. Office furniture and fixtures are 7-year assets. 7-year assets are depreciated over 7 years. This means that you can write off or deduct the purchase price a little bit each year. Office computers, copiers, and printers are 5-year assets. These electronics are not 7-year assets because they don't last as long as office furniture. A business owner is allowed to deduct the purchase price of these electronics over a 5-year period. Residential rental property has a 27.5-year depreciation period. Commercial property has a 39-year depreciation period. The depreciation deduction provided by Section 167A for property placed in service after 1986 is determined under Section 168. That section prescribes 2 methods for accounting for determining depreciation allowances. The one of importance is the general depreciation system outlined in Section 168A. That is the section that was amended by the CARES Act. Qualified improvement property, or QIP, applies to existing commercial or non-residential buildings. It does not apply to new construction. All equipment, labor, and installation costs are considered part of the taxable deduction. There are no limits or caps on any amount of safety systems and equipment purchased. The Tax Cut and Jobs Act of 2017 was originally intended for QIP to be a 15-year property and bonus depreciation eligible. However, due to an oversight when TCJA was enacted, QIP was not included in the definition of 15-year property. As a result, QIP was a 39-year property and not eligible for bonus depreciation. The IRS had no authority to correct the oversight without a legislative fix. A little over 2 years later, the legislative fix arrived with the passing of the CARES Act. QIP placed in service after 2017 is now a 15-year property and qualifies for bonus depreciation. Bonus depreciation allows a business to deduct 100% of the cost of eligible property in the year it's placed in service after September 27, 2017 and before January 1st of 2023. The bonus depreciation percentage for qualified property that was acquired before September 28, 2017 and placed in service before January 1st, 2018 remains at 50%. As an important factor for your customers to keep in mind, that is after 2022, the amount of allowable bonus depreciation is phased down over 4 years. So it is most favorable from a tax standpoint to have the installation of fire protection or life safety systems and equipment completed prior to 2022 in order to get the greatest tax advantage. Your customers that are considering installing or replacing fire protection or life safety systems and the equipment in the near future will be interested in this tax savings benefit created by the CARES Act. You install the new fire extinguishing system or life safety equipment for the owner of a commercial building and equipment. Cost plus installation cost is $100,000. Under previous depreciation rules, the owner would claim $2,564 in depreciation deductions each year over a 39-year period for 1 year net equipment cost of $99,051. Under the CARES Act, the building owner can deduct the full equipment and installation cost of $100,000 for 1 year, the net equipment cost of $63,000. The CARES Act changed Section 168 of the Internal Revenue Code to allow your customers to deduct Qualified Improvement Property, or QIP, in the first year. This 100% bonus depreciation in your customer's federal tax return provides significant savings in the first year. Make sure they understand that the installation or replacement of fire protection and life safety equipment that is installed internal to the building is qualified improvement property. This is a win-win situation for you, the FED, and your customer. Your customer benefits from a very large tax deduction. You benefit with an increase in your revenues for the installation, and every occupant of that building benefits because of an increase in safety. Thank you for your time and have a wonderful day.